Grid trading sounds risky, but when done right, it's pure structure, not chaos. In this tutorial, I'll walk you through a grid scalping bot built for USDJPY that enters trades every few pips, averages positions, and manages them automatically for consistent small gains. You'll see the exact logic behind each block: entry, grid expansion, and profit management, and how to adjust risk, spacing, and exit levels to make the system your own. Let's kick it off.
So let me quickly explain on what we are actually looking here, specifically when we're talking about a grid scalping trading system. Is now entering the US dollar Japanese yen. Every 10 pips, the price continues to go against our position. The system takes another trade to average out the prior taken. So for example, we see here the red arrow simply means that the system here is selling US dollar Japanese yen, betting on that the price will go down. But here we see in a very perfect manner that the system is not right on the first, second, third, and so on trade position. So it takes more and more trades to water down the prior taken trades, betting that the price will eventually reverse and go back again, resulting in an accumulated profit. Now we see the price is reversing to the downside, and then you see at this position, this is pretty much the situation we had here. We made a marginal profit, and this is pretty much what means when we are talking about a so-called scalping trading system. So this is the grid part, what we see here again. It's entering more and more positions when the price is moving actually against the position the system took. So it worked out nicely. And the scalping part of this trading bot simply means that we have a negative risk to reward ratio. Simple example. This system is very confident in simply taking a return of $10 and being also completely okay with a loss of 100. So this is a risk to reward ratio of 1 to 0.1. And this simply means having such a system in place, and to make it worthwhile at the end of the day, you need a very high win rate around the 90-95% mark. So this system is really only viable because it is winning very often, the majority of times, and that is why it is completely okay for such a system to only take these tiny little profits over time. Now here we see just another example for a massive grid. The system took short positions here, and the price continued heavily moving against those positions. Now you see now the price is going for a short period now into the desired direction, not adding more positions to it, simply waiting to pan out. Now you see the price moved again further to the highest taken position, taking another one. And now we see the price is going down, and eventually, let's see. Now we see pretty much also live in the visual backtest the, well, strength, but also definitely the weakness of such a grid scalping system. You have to be confident with quite a steep drawdown once in a while. We were once sitting here at up to 10% of floating drawdown, so equity unrealized loss. And then having such a system in place, well, the benefit here is you as a human, you are out of the equation. You simply have to let it run and do its thing and trust well the backtest you did before. Building such a system and doing this well manually is very nerve-wracking. So this is the beauty of having such a system fully automated. This is obviously the upside of having an automated system. The downside here is, well, we have a drawdown of up to 10-15%. And because it's a scalping system, the upside is in a very well off ratio, I must say, since, well, here we have now a return of a couple of bucks. Let's actually quickly check it out. I think it's roughly sitting at a return of only 70 or 50 euros as a return. And you were before, we see it here with the green equity curve, in a drawdown of roughly 15%, what translates to an account of 1K to 150 bucks in return of only a return of even less of 50 bucks probably in returns. Is the obvious downside of such a system, but I think also where the creativity starts seeing such a system, because you can simply avoid these kind of drawdowns we see here in the system by adding more indicators and adding your own flavor to such a system as we are building something like this in Profectus AI. And there you can simply add your new logic, your new rationale by having new indicators or even price action, whatsoever what you have in mind to the system when you're analyzing these kind of steep drawdowns to avoid these kind of events. And I think this is also the beauty of having such a very simple system as of now. Maybe to quickly explain the rationale of this system on a high level, because you can also get access to the source file by simply accessing Profectus.ai. But in a nutshell, it's simply analyzing the market based on indicators. Are we currently in a highly priced market or rather low priced market? Then we go either long or short, purely based on exponential moving averages. That is why we see here, let's quickly pause it, the two red lines on the chart. The one is the slow moving exponential average and the other ones are the faster ones. And obviously they are always lagging behind since there is price data is going into these kind of indicators. So there's always a delay. So for sure, there's a better approach of trading such a system than it is done by now. Hence, get the juices going, grab the source file down below in the video descriptions to add your own ideas here. But what is happening here, this is pretty much the entry criteria to either go long or short. And then once this triggers what we see right here, for example, the system decided let's go long. And what it simply makes, it recognizes, cool, the first trade happened somewhere here on this level. And then based on the criteria of 10, 15 pips, we enter the second, the third, the fourth, the fifth, and so on trade on a very simple, basic logic to water down the first taken trades, because this system is banking on the fact not to be right on the first trade, to simply be correct on average after hundreds of trades. That is why this system is having a very high win ratio of around 80-90% at the end of the day. Otherwise, the balance curve wouldn't look like this. So when I'm just looking, for example, on these kind of charts, I already get some ideas how I could definitely improve such a system by, for instance, adding the Huel moving average, overall detecting the trend of the market. And for example, not to go long when the overall market is downtrending, for instance, because then you are going long in an overall downtrending market. Your desired trade level, again, it can take quite a while, as we have seen it before, right? Especially here in this time period, it can take a couple of days, if not even weeks. And this can be still quite nerve-wracking, even though the system is automated. Then once you enter it, for example, in a grid, the system simply checks the accumulated profit and losses, as you see it here down below. It's happening obviously super fast. And then based on your criteria, you can also define on Profectus.ai is when do you want to reel in the profits? Is it, for example, at the accumulated profit of $10, $50, $150? And this is also something what you want to backtest, what works best long-term on recent high-quality market price data. This is also, I would say, the very fun part of having such a system. First of all, having a very simple trading approach here, trading bot, and then making it more and more sophisticated over time, because then you get a real grab on pretty much what is the trading rationale and what is the upside and the downside, and how can you then improve it over time. Like another idea was coming in my mind, where you can then also add on Profectus.ai is, for instance, to simply limiting the amount of trades you want to take in a certain direction. For example, here we see again, ton of trades are taken even though the price is tanking, and maybe you simply want to cut your losers and the overall rationale after 5 trades, 10 trades, and simply call it a day. But then the overall rationale of such a system obviously is changing, because then you're taking a loss, and until you recoup such a bigger loss with a scalping approach, it takes quite a while. So that is also something you really want to take into consideration. And that is also something what is covered in the help center of Profectus.ai to guide you on what is like a good trading rationale, what are best practices in creating trading systems, what are best practices in optimizing systems, backtesting, putting them also live, because after not only having such a system at your hand, adding your own flavor to it, back testing it. It is then also all about forward testing it on real life market data. And there are just so many pitfalls you can simply avoid by simply following very straightforward best practices that we give you at hand on this channel, but also in the help center of Profectus.ai, plus live support from our support agents. I think this is really, really worthwhile. And simply what also really, really helps when you get this system on your hands, when you check it out down below in the video description, is by simply watching it as we're doing it right now. You see how it is behaving, what it is doing, and then you get really a feeling of what could we maybe improve and what is working well already and what is working not so great, especially when you are like zooming in and or out. And then, for example, we see here another not such a nice period because the price is moving heavily against the positions we are taking. Again, we see here in the lower corner, sitting at 6% of a drawdown. Very inconvenient, right? So these are maybe the periods you really want to dial in, focus, like the top 3 drawdown periods we see here. We have a drawdown period in February 2021. Then we have also a steep drawdown period here in July. Then another one, for instance, also in November. So these are like the periods you really want to dive deep into to see what is the system doing good and what are the weaknesses. Because you definitely want to first work on the biggest bottlenecks of such systems. Because if you can control those kind of like bottlenecks, the weaknesses of these trading systems, the other periods, you don't really have to bother at the beginning, right? Because this is working quite nice. And by doing that, you can easily, for instance, over-optimize and curve fit your trading system by simply adding too many indicators, kind of a weird price action indicator or whatever you want to add here on Profectus AI, because there is virtually no limitation regarding your fantasy, how you want to enhance or even build your system from scratch. And this is just another angle how also the help center of Profectus AI can help you in providing best practices, what it takes to build a trading system from scratch, but also improving and enhancing a trading template as we're doing it here and providing it to you for completely free over time without curve fitting and over optimizing it. When I'm saying curve fitting and over optimizing, what is meant by that? Now we look always on historical price data. So we pretty much know what's happening next, right? And the more we work with the trading system on a specific asset, we simply get a feeling over time, cool, now we're in 21, 22, I don't know, COVID happens, so prices are going up and down for this kind of period. And this is a bias, which is really, really hard, for example, to get rid of as a human. Plus, the more variables you add to your equation, the better you can really also model pretty much your system to the price data we have here at hand. What simply leads to the fact that, cool, now on historical price data, our system is performing insanely good, but simply because we look back on historical price data, and as soon we put such a system again on real live market data, for whatever reason, the equity curve doesn't look anything like this anymore, but actually pointing downwards. What is the reason that is curve fitting? Because we simply checked the history too much. We made it too biased, too unrobust for the actual market data out there. So that is why also the forward testing part is super important. By taking the system out of your backtest, putting it on live charts, even on demo money, completely fine. Better even if you have a little bit of cash aside to test it on real money, on the real spreads, commissions, etc. of your broker. And then see what it does over a time period of 1, 2, best case, maybe even 3 months. Is it still performing? And if you're then confident and you see the numbers actually checks out and they align with the backtest reports, you are golden and you can actually go ahead and apply it for your actual trading account. This is the DNA of the Scalper grid trading bot. Let me quickly explain the inner workings of this very potent system. How do we read it? We read it from the top to bottom. It's a simple decision tree workflow we're looking at here. We simply, double always the kind of blocks we once do it here on the left-hand side for the buy positions and on the right-hand side for the sell positions. So very straightforward, very simple. And I will simply walk you through all the blocks step by step, so you also get a hang on it to understand the status quo of this trading system, and then later on you can also make it your own, adding your flavor within Profectus.ai. So now first block here on the top, run per candle, it's on the current time frame. So when you backtest it, you either can choose the time frame in MetaTrader 5, or when you apply it on actual charts, on the time frame that is open on the actual chart, this is pretty much the time frame it will run on. So now let's assume also like the suggested time frame is 1 hour, so you have the 1 hour time frame open, or you will backtest a 1 hour time frame. So this one will trigger the next block once per hour. Now to the next block, it's a trade rule block, simply checking the fast moving average, which is exponential, based on the calculation of close prices, also again here on the current time frame, so also on the 1 hour time frame. Is it bigger than the slower moving average, which is also exponential based on close price, also on the current time frame? Now the next block, if this condition is true, so the fast moving average, the value is higher than the 200 period moving average, what simply means that the fast one is above the slow one, the next block will be checked, and that simply sees, is the last closed candle, that's why candle ID number 1, is lower than the fast moving average based on a period of 20. So in simple words, did the last candle close below the moving average? If so, next block is getting checked. The next block is counting trades, simply checking, do we have any trades open? If not, fantastic. The buy now block will get triggered. Quickly to the money management, we will take here fixed volume of 0.01 lot. You can also obviously, up to you, change it later on here, making it based on risk percentage of your balance, such as 1%, 0.5%, whatever it is. And if you feel frisky, you can even add your martingale approach. However, that is obviously up to you then. Then the stop loss take profit. There is no stop loss in place as of now. Also no take profit. We will come to this later on. It's actually based on pips. If you feel like, I actually want to have a hard-coded, so to say, stop loss, because this is also actually one of the best practices we teach, and we also show you in the help center of Profectus.ai, then you can change it here. You can add your stop loss here. Let me quickly show you the options you have. You can have add fixed pips, also custom price fraction, so you can add the ATR, the average true range, which is a very well working concept because it is adjusting to how hectic is the market. If it's very volatile, the stop loss gets bigger automatically. If the market is relatively calm, also the stop loss gets a little bit smaller, what also then helps you in reaching, for example, your take profit level. Let me skip now the sell side because it's pretty much the same as for the buy side, just mirrored. And now let's go to these blocks, which are pretty much a very straightforward, simple way of managing trades. So we see here, select trades. You simply tell here the system, your trading bot, check out all the open trades. You can see here, you can also check close trades, pending orders, but here we chose open trades. So the current positions you are in. Then the next block, trade rule. And the simple takeaway from this block is simply when we are in an accumulated profit that equals the fixed pips value that we have defined here on the right hand side, what will happen? This block will get triggered, close trade. and we will close 100% of the open trades. So this is pretty much simply looking on the whole cohort of your open trades currently. Very powerful, very simple. And yes, you can here also add a lot of interesting kind of concepts, either making this number higher or lower, so you are happy with lower returns, or you simply want to increase it and only close all trades with a bigger accumulated profit. So that simply means, let's say, because it's a grid system as you saw it before, right? You have 10 trades open, half of them are in the loss, maybe one is break even, the rest are profitable, and now you're just reaching your desired profit target. Now you can pretty much play around with where this profit level should sit. Now the second part, I invite you to once again check out the file down below in the video description, because this is where pretty much the juice sits in of this system, where the part of the grid comes in, where you open trades in a very systematic manner when the price is actually moving against the position you took. For example, now you bought into the market, or now let's say the scalp grid trading bot bought into the market. However, price continues to tank, going down. Now you take every 10 pips new trades. This is pretty much happening in these kind of blocks. And here you can also, of course, play around with the type of grid. Maybe you want to widen your grid instead of 10 pips, 20 pips, or actually you want to double the grid size, so the grid is getting bigger and bigger, so you avoid getting too many trades open. These are the many ideas I have here to make this system, which is not really yet a fully viable system in my point of view. It's a fun system, that's for sure. But then adding these kind of ideas is making this system more and more a viable system. And that is why it is so much fun by simply checking it out. Use this as a starting point for your trading bot career, algorithmic trader career and journey. It is so much fun. And if you have any questions, simply reach out. I invite you to here on the lower right hand, open our chat, where you can access not only our help center and browse through all the articles that we have created for you so far, but also to reach out to us directly, to our support team, or even schedule a one-on-one call with us for a quick coaching session.